The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. And of course, I am the third hour up. And starts off with Steve Rose, great 2 hours, 9 o'clock till 10, and 10 till 11. You've got, who's today? Wednesday, of course, Larry Pesavento will be coming up straight after me. Then you've got Daryl Martin, you've got Dave White, you've got Tom O'Brien. What a full day. What an excellent day of technical analysis you should have. And unless I'm mistaken, I believe we are all here at TFNN in the bearish camp for now. And that's going to be very interesting to see how it plays out because, as you remember on Friday, we added to short positions and we added, in my opening course, my daily service, we added to the S&P going short. We were using a 3 times short. I never do that, but I felt so strongly about this particular move, not knowing exactly how low, not having numbers yet, having to see whether or not. You remember, my thing is that bear markets unfold when they're on back-to-back triple-digit down days. They almost were a triple-digit down day yesterday. Then suddenly that buying came in. What I say to my subscribers, and this is to me absolutely key. I spent a lot of time in my overview section of my daily newsletter. There's the Dow that let me just go there. The Dow that I show every single day with commentary. Not only is there commentary on the chart, and I said that there's a time, we've got 1 day left, that's today, to get to the 15,038 left side low bar in a left side, right side price time. This is a technique that I've developed over the years. Left side, right side price time, price time target area, plus I use what I call an inside wedge, and today the low so far is 15,041. We are 3 points away from testing the 15,038 level. That was a target. That's number one. Number two is, so I have this entire narrative on the chart, but underneath it, I do an updated one that goes, sometimes it's done the day before, sometimes I need that morning to finish it up. Then I show the 120-minute chart. Look at this. Same thing here. This is now leg E down. I discuss the cup formation very often. In this case, because we're going down, I need to talk about an arch formation. The 155.14 high in the Dow Diamonds in the 120-minute chart was very important. And it shows that there's been a test of the area that I showed right here with 150 point, was it 30? I don't remember now. 150.29 right there. 150.29 was the target area. It's extended a little bit in time, a day in fact, but it's got to 150.22, broke it by 7 cents. Most important, leg E and the MACD and stochastic are still not saying we're ready for a major turnaround. A bounce, yes, but not yet a major turnaround. That's the 120-minute chart, but this is the one that's really key. Look at this. I spent a lot of time on my opening call narrative, as I say, in the overview and a market today section, discussing the problem that I saw in that the volatility index yesterday did not make, in the 120-minute chart, did not make a leg D up at above 17.58. It was impossible. The Dow was up and then it plunged, and yet the volatility index didn't recognize it. Today it is. The high so far is 17.56, 3 cents away from breaking to leg D in the daily, which will start to tell me now we're getting to a little bit of an overbought situation in the market, but we only deal with that at the close on the daily basis. But the 120-minute chart is getting closer and closer to starting that leg D up. And now yesterday it was trading. It made a high of 17.25 when the day before the high was 17.58. That was crazy. So I said there are two ways of interpreting this. Either number one, it is because the market is saying there's internal strength that's not been recognized, and that together with the volatility, the short-term trading index only going to a 1.44 yesterday, it was just saying, hey, this is either we didn't notice the market because we were out to lunch, or when we finally do kick in and start to move higher, this market is going much lower, and that was the interpretation that I said to subscribers that I'm giving to it, and that was my reasoning. Yesterday we got stopped out of our Dow short, the 200% short that we got by the exact low of the day. It was so frustrating because we got a 8-cent profit or something pathetic like that. The day before, on Friday, we had a fantastic gain. We gave it up because I wanted to hold that position. I did not want to give back. When you've got a big gain, I'm not prepared to give back. I don't want to see a loss after a big gain. So that was my reasoning there. But there was another reasoning why I would have added to the position at that level, because we had the 3 times short the S&P from Friday's open. And Friday, if you remember, the Dow was up huge, but the S&P was lagging a lot. It was telling us that there was internal weakness. So that's that one. And then we have a short in one of the sectors that I've been talking about for a while that is definitely one of the leading sectors to the upside. And at least in the shorter term, I would not be surprised if it continues to be a leading sector to the downside. That particular one is up huge percentage because it is in fact 3 times the usual the root of the ETF. So that's the way I'm looking at it. And I don't know if we got it because I've been kind of busy here with something else, so I just wasn't able to double check. I don't know if we managed to get another short stock. Oh, we just missed that one. Oh, I keep missing that one. It keeps going lower. Well, that's the way it is. So now this is very interesting because I'm talking about a mixed market, and the mixed market says that there is a chance that within the framework that we're discussing right now, you see here's the E-minis, you see that downtrend line there. Let me just make that what I usually do. I color it in. I usually go pink if I'm on a white background, and I call the Chapman wave inside wedge. It is the E-minis are in leg C down, and they are walking. I usually say walking the 9-period moving average. In this case, they are walking the descending trend line that I call the inside wedge, the dashed line there. And it's right at support, so there might be a little bit of a bounce. But I can tell you this, that if the E-minis break 1608, they're at 1615 right now, we will just go straight down to my target area of the 1595s. Peak E in the weekly chart, and the MACD is still good. So either it says there's plenty of room for the price to go down if the MACD is going to turn negative, or it says watch that fast-moving average real closely because it's going to be a clue. Because if the stochastic, which is 83% in the weekly chart, is only Wednesday, so not even 2 hours into Wednesday, but watch that closely because that's going to be key. Now, the 120-minute chart has made a serious move down. This is either brand new, let's say ABC, D. It's either brand new E or old E or brand new B, but the stochastic and the MACD in the 120-minute chart of the E-minis are kind of getting to some kind of support. Let me read you the numbers because the Dow's down 120 at 15,056. The comp index is down 28. The E-minis are down, the S&P is down at 13. We've got gold now is up 940. Now, I've been talking about gold for a little while, talking about it from that major low of the GLD, and that's what I was using, not the gold contract itself. No, I'm sorry, I wasn't using that. I was using, the gold contract? If the M is still trading, I just want to see that. M is still trading? No. What did I use? GLD. I used to, of course, that's exactly what I used. I've got to move the chart over. I used the day, that's the 120-minute chart, take it out the way, there it is. So the GLD, the day of, I should type that in so I know, the 15th of April. That huge, what I call climactic volume spike. It's the way I use volume. Everybody has their own way of using volume. I use unbalanced volume all the time. But I use, even more importantly, on rare occasions, is a massive capitulation in price coinciding with a huge volume spike, and that forms a low that I discuss here that can go for at least 28 bars, but very often it goes for 38. I've even seen it go for 52 bars without breaking that low. But it doesn't tell you that it's a major price move on the upside. It says it's a nice percentage move. And what happened in this case is I spoke about the arch formation, which retested the 130.51 low of the 15th of April at 130.85. Well, look what happened. 130.85 was 4 cents above the previous low. So it has not broken that low. And we've gone, I don't want to count the bars. I really should put I'm going to do it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5, 7, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40. Hey, that's 40 bars. We might get the 52 bars without breaking that low. Try to make a second arch formation, but it's really weak. Until the GLD breaks above 136.98 and really breaks it decisively. This is merely sideways trading range. Nothing to get too excited about, even though we happen to be along the equivalent of the GLD. I did it because in the Chapman wave I got to go with what looks like it has a rally potential, but I'm not that impressed at this particular point. Silver is up 21 cents at 22.62. Platinum's up 18 at 15.11. High-grade copper's up 135 at 3.38. This is interesting. Crude oil is up 56 cents at 93.88. Bonds are up 21.30 seconds at 140.24. They should be up. In fact, on a day like this, bonds should have been up 2 points at least. So it tells you the Fed is propping up bonds, but they're having a tough time. And we'll talk about the dollar right now, because the dollar at this particular point, the futures are down 16 cents. I've got the dollar at a peak E in the daily, arching over. And the test that is what I've been discussing here is how it tests if it breaks 82.43 was the low of 2 days ago. If it breaks 82.20, there's a real good chance that the 81.58 200-period exponential moving average will be hit. Weekly chart has made a peak E. This is going to be really interesting, watching how the different currencies work. I had AUS. USD, it's AUD USD. I had a question about that, and I said if it breaks, it was last night when I got back, I said if it breaks the Australian dollar currency pair, if it breaks 95899, that's not good, because the next level of support is 9547. If it takes that out, it has to hold. And not only has to hold, but it really needs to break above 97909, and it hasn't done that. It's gone to a new low. One thing I'm missing here, there was a question. I will look at it. Monster is what someone asked me about. I'll get to that. And we've got our callers online. We've got Lou in Nashua, Bob in Ransom, New Jersey. I'll be right back straight after this. Basil Chapman, Dow's down 122, S&P's down 14.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. And Dow's down 117. S&P's down 13. I like the percentages here. Dow's down 0.77%. And the S&P's down 0.88, 84. I like that differential because they're in sync as far as I'm concerned. Right at this particular point, they should try to find some kind of support for another bounce attempt. What we're looking at here are basically I'm looking at lower lows and lower highs rather than that constant triple-digit down move. But there's no question in my mind that at least in the shorter term, the tide has turned to going to low tide. And the rising tide, I kept wanting to buy. Is goodbye because now we want to short. However, we are still going to be looking at certain stocks. We added one today that's been just got away from us, but I wanted stair-step buying in this particular. That's the plan. The plan is to buy it here and hopefully buy it a little bit lower down. That's the plan. We'll see if that works. And also, I'm looking at one of our stocks is up 0.69%, 1.52%. That's good. That's really nice action. You want stocks that have good relative strength right now. Those are the longs you want to have. And we'll be looking at the home builders soon. I don't know yet. They've had a good pullback. I think they need a little more time. Let's go to Lou in Nashua. Hi, Lou. How are you?
Fine. How are you now? How are you, Basil?
Very well, thank you. You'd like to look at?
NUGT.
Okay, that's Nugget, which is direction daily gold miners 3 times. It's an ETF. I guess it's an ETN. I'm not sure. Actually, I'm not sure if it's an ETN or an ETF. They should have shares, and they'd have to be shorting them. So it's 3 times the long side. The long side of right. And in fact, it looks very much like the GLD, obviously, but the GLD has not gone to that leg C. Now, I couldn't remember, are these are the smaller cap? What exactly do they have in there? Do you know?
I'm not sure, and I think they're just the gold miners.
So it must be the same kind of mix. Yeah. Okay, but it is stronger than the GLD, and I like that. And I just wanted to look at the GDX for the moment. There it is. NUGT is triple the HUI. Okay, good. So the GDX, it looks very much like, in fact, it looks exactly like the GDX. Good. Now, what I'm going to suggest do you have a position?
Not yet.
Not yet. Now, this is a tough call right now, and I'll tell you why. I like what's going on. I still consider this is part of that arch formation that I keep talking about. Let me just show you here. If you don't mind, I'm going to just, for the moment, use the GDX because I've got that notated in great detail. I've already done the one pattern. If you're looking at Tiger TV, folks, Tiger TV allows you to look at these charts live as we're doing them here on all the shows. Just a fantastic medium that we have. Whenever I'm out. I love to just grab my iPhone and I look at all these different charts. I listen to the programs, and it's just a wonderful medium, and it's so clear, and I love it. My suspicion is the real test for the GDX, and I'll keep including the NUGT because that's what you asked me about. The real test will be if there is a rally above the high of 2 days ago in Nuggets Place, which is trading at $11.86, up 41 cents. Now this is interesting. Today's the 5th of June, and we got some kind of a low of importance in the GDX, which is different to the GLD, which did not cut the 150 point, I can't remember, 51, I think it was, low. The GDX went to a low at 813 on the 20th. So it's only now starting its up move. So the very big key for me will be, will the NUGT, will that 3 times long, the HUI, that's the, let me just see what it's called, the official name of the HUI. The HUI is, in fact, the ARCA Gold Bugs Index. Yeah, it's the same pattern. I like what's going on, but I'm disappointed that the price movement has been so weak. Now, I should say I like technically because the stochastic's at 88% and the MACD is still expanding. But it's really, you see, for you to get in now, your risk is higher, much higher than when it was just maybe 5 days ago when I don't have to tell you that because you know, but I just want for anyone listening, they wouldn't be able to tell because they can't see the chart. The low on NUGT on Nugget was $8.13 on the 20th. Well, right now it's trading at 11.37. That's a very nice percentage gain. But when you look at all the other gains, very quick accelerations up, they've used less of the power of the technicals and gone higher, but then they thought, oh, this is going to be interesting. I'm pleased you called. If you can hold on, I'm going to go through this. It's formulating in my mind, and now I can speak to the exact issue of what I think might be an idea that you might take on. So we'll be back, folks. Basil Chapman with Lou and Nash Show. We've got Bob in Rumson, New Jersey. I hope he can stay. We want to talk about that.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back, and we're looking at Nugget, which is the direction. Folks, anything you want to know about the direction, just go to the front page of TFN and find out all about it, especially the 300 percenters. And this is one of those 300 percenters. It's based on the HUI, which is one of the gold tracking indexes, gold stock tracking indexes, and it's. At this point, it's in peak C, and I suspect it's going to go to a D. And that D has to be a very strong move, because the real issue is how does it break above the 1354? Of course, anybody in it would love to see 1354. How does it break into that candle of the 9th of May? Well, first of all, it has to go to 1243 to start leg D in the Chapman wave, number one. Number two is when you get a succession of peak A, B, C that are quick like this, you can expect a bit of a pullback after you get D, because the speed is very quick. But if the price gets halfway into the candle of the 9th and can get into the 1279 area, that would suggest it is going to test the high, and if it breaks the high, the most important level will be 1420, the high of the 25th of April. Now, we are long the gold contract itself via an ETF. Most importantly, I'm anticipating just another arch formation, but the GDX is actually acting a lot better. This is the smaller gold stocks, I believe. So this is what I'm going to suggest to you. Lou, I know you're looking at it because it's $11.71. It means that for much less money, putting it up, you get way bigger bang for the buck. But if instead of giving you a punch higher, it gives you a punch to the solar plexus, it's not going to be pretty. So this is what I'd rather recommend to you, because you've got the kicker of the 300%. I'm expecting that there should be a leg D up. At this point, it's pulled back off the high of the day. The high was 12.14 and it's trading now at 11.69. $11 is the 9-period exponential moving average that it hasn't hit yet. My suggestion is this: if you want to start a position, make it a small position, realizing that it's really setting you up for two things. It's setting you up because if you get a small position and it pulls back without yet making leg D and it holds $11, if it starts to rally and the dollar is breaking down at the same time, that's where you can add a second trading position. And as soon as it gets to leg D of $12.43, you immediately, on one of your positions, you make a tighter stop and just see if it takes over with momentum, because the stochastic's at 86%, and if it holds there, that's going to be good, and the MACD is still strong. That's the only way I'd recommend to it. Even though I should say it's going to leg D, you can load up now because it's 300%, going from $11.71 to $12.43 is a huge move in any case. I'm looking more at the risk rather than the reward. You understand the way I like to look at the stocks. And $12, and right now the 9-period moving average on the weekly is at $12. Oh, is it $13.62. So we not once has this closed above the 9-period moving average in the weekly chart since it broke down way back. Back in the week of the 19th of October of 2012. This is the first opportunity. I think it's going to try to break above that 9 EMA in the weekly. How it holds is going to be key. So that's my recommendation. Start a little bit now. If it breaks over that leg C, that's D, and you've got to be a little careful, but that's only a small position. But if instead it has a pullback today and it starts to test 11.20, and then tomorrow morning you see that the dollar's falling and gold is up, then you can add another position, and that position has a pretty tight stop. I hope that helps you.
Yes, it does, Basil. I appreciate it very much.
Thank you so much for calling. Good question on that. That's Lou in Nashua. Let's go to Bob in Rumson. Hi, Bob. How are you?
I'm good, Basil. How are you today?
Very well, thank you.
I'm short the IWM. My question is, how do you feel about this security filling the gap down at 93.47?
That's a really good question, because there are a couple of things that are going on. Now, are you short the IWM, or are you short via a different vehicle like TZA or something?
That's what I own, TZA.
Okay, so let me do this, because this is a very important moment for it. There's a pattern in my, I'll show this to anyone who's probably new to the show, who maybe doesn't know my work. There's certain patterns that I look at all the time. And when you come down sharply, when the price comes down sharply, not you, but when the price comes down sharply, and then bounces and fails to make a new high, and then comes all the way around, it's a pattern that I call, I'm going to draw it in here, it's called the H pattern. And that H pattern in my work has incredible implications. It has the implication of being very successful if there's a test of the left side low and it bounces higher. There's a touch or break below and closing above. That has another implication which says it should test only the arch. And then there's another test that says if it breaks and closes below, you start looking for the next downside moves, because there could be a one-to-one relationship of the arch. Now let me just put that into practical terms. The IWM, which is the Russell 2000 index, went to a high of 100.38 on the 28th of May. It pulled back sharply, and it went down to 96.51 on the 23rd of May. Let me just put that in, 96.21. Now here comes the real kicker. It rallies, and it rallies really nicely. It goes to what I call a gray A, which then fails. Gray because it's underneath the previous high of peak E, and I can't call it a new buy signal going to buy mode until it breaks out. And even then I would have an alternate wave count. Why? Because the MACD and the stochastic had already started pulling back, but the on-balance volume had shown strength as opposed to the relative strength which had already started weakening. And that's the reason why I figured that there was some internal strength in many of these stocks, and you saw that very big spike, that sudden spike on the 28th. Looked like it was going to break out and everything was going up again, but in fact what it was just an isolated event. Now the real kicker is this. I didn't write that correctly. That should be 96.21. The low today is 96.57. The MACD is very poor. Stochastic is at 41%, still very poor. I suspect that the 9-period exponential moving average, which had been fantastic support all the way until the break of the 22nd of May, when the high was 100.38, the low was 97.11, closing underneath the 9-period moving average. That was a tip-off. There was a problem coming up. Now what we're looking at is, if this pattern is one that says that the 120-minute chart, which is kind of oversold in some regards, has a bit of a rally. That rally could take it to 90. It's at 96.84. It could take it to 97.51, maybe a little higher, 98.03. But the weight of evidence is that the daily chart is the rudder for this. The monthly is fantastic. The weekly has started these M patterns in the MACD and the stochastic that says just be real careful, because there's a peak D in the Chapman wave. You look for a peak D, and that peak D says if you start to fail with the technicals concurring, going in symmetry with the failure pattern, then the 9-period exponential moving average becomes the first really important support level, and that's at 96.01. I just want to double check. Is that 95 or 96? Yeah, 96.01. And if that's if on this Friday it closes under that, then what was a trend line in the pattern that I call the falling axe, I'm going to show some of these patterns in a moment, that says the target level could become the high of peak C at 94.96, and if that goes, we'd be looking at 93.23. How would it fail? It would fail if the H becomes an M pattern, and that can happen. I think you're absolutely on the right track, because this this market right now, TW. What did I say it was? TW. What did I say? TZA, of course. TZA. I just got my letters all mixed up here. The TZA hasn't yet gone. Yeah, it's in leg B, and that leg B is good, but not yet great. The stochastic and MACD are doing exactly what they need to do, but I'm looking at 34.27 as the 9-period moving average in the weekly chart, and to get there, what I suspect we're going to need is for the volatility index to get into the 18s, and then to be holding in the 20s. Will this be the move where the volatility index finally gets to the 20s? Because that's going to help you in your trade. I don't know yet, but the blasé, the ignoring of the market move yesterday by the VIX and the TRIN was a real heads up to say, wow, be careful. That's complacency, and it's really not good. And it says that this market should go lower. I think you're in the right position. You want to see a close. You want to see a close in the next 2 days under 96. I'd prefer under 95.90 just to have a little cushion there. And then all of a sudden, the 97.91 9-period exponential moving average becomes extremely strong resistance, and all of a sudden what was support becomes a repellent area. I think you're looking at the right direction, the right move. The one hesitancy I would say is that it hasn't even nicked 96.51 yet.
That's what I'd like to see. I'd like to see it break that.
Yes, absolutely. So we're on the...
Especially on the 120-minute, I have it made a peak C top at $100.10.
Oh, you got that as a peak C, $100 and 38 cents. Oh, wait. Which? Oh, this last one. Oh, yeah, that was a failure.
$100.10.
No, but
I have making a peak.
That's what I would call.
I do something a little bit different than you, and
explain,
I've always meant to ask you why you do this. If you have a second. Yeah,
please.
What I noticed that you do when you do your wave count, I'll just try to create an example here. So, let's say a security had a trough low of $10 even.
Right.
and it made its way up to, let's say, $13, and it created a peak C at that point. And then the security came down in price, and it made a low of $10.01.
Yep.
Since it didn't break the low, I still consider it a peak C, and I consider it a pattern still valid.
Now, okay, so let me. Do you have my CD introducing the Chapman Wave methodology? So you remember what I discussed. What I discussed in it is that if it breaks it by 1 penny on the low, it doesn't become a restart. You have to think of it as a brand new attempt at a buy signal. So the restarts turn out to be really positive in the end. And if you have a whole bunch that do not break the major left side low, because it's accumulating, it's called what I would call, it's like a spring-loaded low that just gets tighter and tighter, and then eventually it's really bullish. But if it breaks it by even 1 penny, although the theory behind it is kind of the same, I'm very strict. That starts a brand new buy mode, buy signal, but you can't continue the previous notation. It has to start with the new plus sign, and then that has to be activated into a brand new B. Now, what I've done, if you're looking at Tiger TV, I've been, while you were discussing that and while I was listening, what I did is I showed, let me just see, I'm going to look at the chart right now. Let me just get it live here.
Yeah, I'm looking at it.
Okay, I'm making it a little bigger. This is the 120-minute chart. And what you did is you went did you call that, you call that C. I don't see the C. I call it a B. Where did you get the C from?
Well, after it made a peak D top and it came down in price to the low, it's 4 bars after the peak D top.
That makes A.
There's an A, and then on my software, I have it making a higher high than the A. That's I think 3 bars to the right of your A.
So you have it higher than 97.93.
Let's see. I have a high.
Ah, you do, right? You have 98,
97.35 and 97.95.
Okay, then 98. Okay, I'm with you. We're both together on this one. It was being covered up. Good. Thank you for pointing that out.
To the right of your cursor, where it is now, I have that as a peak C.
And it's okay. So it immediately becomes a C minus if it breaks the low bar, 96.71, but absolutely the low bar of 96.51. So far,
96.51,
yeah, that's number one. But number two is if it uses up time negates it as well. So most importantly, I call this a gray C because it was underneath that major peak D of 100.38. But look at this. This is the pattern you want to follow. You see that cup formation? That's the pattern in my CD introducing the Chapman Wave methodology. There's a chapter 22 that I call the drop bucket. That's a double top. Just a nickname I gave for the double top. And that's like the double top right there. This is the pattern. There it is, that pattern that I'm showing here on Caterpillar way back.
I see that.
So that's the pattern you got to keep in mind. Not only that, when a cup formation breaks 1/3 to a half from the left side lip, that would be 100.36. There's a real good chance not only will it test the low, but it'll break the low. So I'm looking to see it break 96.51 at some point.
Okay.
So I hope I answered your question, but
I've used your system for about 10 years, and I absolutely love it.
I thank you so much. I hear that from so many people. They've integrated it into their own thing, and it really works. So, there's just one other, hold on, because there's one other thing I want to look at from the IWM.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's Basil Chapman. We are still on with Bob from Rumson, New Jersey. So, Bob, I just wanted to show you a couple of things here. I'm also going to ask you to do me a favor. If you can send me an email, just so that I have your email address, I'd like to send you the chart. I've got some other explanations that are a little more detailed since you have been using the chat wave for so long. And for some people, the eyes glaze over when they hear me talking about it right now, because they are either listening on the radio or they aren't able to see the chart very clearly. But the 120-minute chart has a trough A minus from that peak D, and then it runs up. And underneath it, it's got a new trough A, trough B, C, D, and it's in leg E, possibly making a trough E. But within that, there's a down channel, and the inside track. You know how I use that inside track? I've got the inside track, which coincides with the 200-period exponential moving average, which has a target between about 95.60. The actual price is 95.40, but it's a moving target because it'll move with the price. But that coincides exactly with that down channel area. That's the area that I'd be looking at to see how is it going to find support, even if it goes underneath that key level. That's number one. And the other is, the weekly chart is going to be really important. So send me an email, and I'd like to just go through a couple of things because you made some fabulous observations. I just want to clarify for you, if you don't mind.
No, I will do that. And I also wanted to point out that, as a trader, you have to find out what works for you.
Yes.
And one thing that I learned from you that really helped me was the term toolbox.
Ah, right.
And,
in other words,
our
Sears and Roebuck toolbox. And the reason I mention that is, like Larry Pesavento, he uses Fibonacci work quite a bit. Correct. Yes.
And what I found, if on the daily chart of IWM, if I go from the 418 swing low up to the top, that maybe this is coincidence, but where that gap is, that is also the 618 retracement.
I could believe that. I could absolutely believe that. Yes, I can see it visually. Yeah, isn't it? I love the way these things work. When you've got a robust system, it embraces other robust systems. Hey, thank you so much, Bob, for calling. I do appreciate it.
I don't know where I would be, and this is not an advertisement, but I have to tell you, if it wasn't for you, I wouldn't be a trader. That's simple.
Thank you so much for saying that.
I've followed your system for 10 years, and it works.
I do appreciate that, and thank you for being a valued Chapman waiver. I do appreciate it. Thanks for calling, Bob.
You're welcome.
So I'm going to quickly look at, folks, I'm looking at AZO, and AZO is AutoZone. I believe it's made some kind of a pretty serious top here in the daily. The weekly, yes, I need proof on Friday, but most importantly, the question is, what about AZO? And I would say that AZO is now walking the underside of the 9 EMA, and the MACD and stochastic are very poor. If AZO trading at 405 minus 190 takes out 401.93 was the low of the 20th. If it takes out 400 and starts trading in the three, let me get this right, in the 390s, then all of a sudden what we're looking at is 390 is the 9-period exponential moving average in the monthly, and I would think that is going to be tested based on the MACD and stochastic at this particular point. So what's the upside surprise? If it closes above 412, it's at 405 right now. I think the 412 to 413 is going to be very strong resistance. I think it's coming down. So we're about to wrap up here. Two things I wanted to remind you of. One is coming up, just the most wonderful trader. You just heard Bob talking about his fabulous Fibonacci's and the different extensions that he uses and the different methodology. Larry Pesavento is coming up, and of course all the fabulous program for the rest of the day. I'll be back tomorrow, and wow, Dow's down 154. Bear market material on the shorter term. We'll see what happens by the end of the day. Thanks for being here, folks. And don't forget my opening call. Go to the front page of TFN and check it out. 2 weeks free. This is the perfect time to get it. I'll be back tomorrow.